good morning, good afternoon. Depends on where you are in the country or in this world, I guess, Matt. 11/27/2018 markets are moving again like they always have been the last couple months, it seems. How you doing this morning?
Doing very good, Tim. Excited to be here with the halftime crew for Delta Tuesday.
We've been talking about this for quite some time. A lot of the volatility and opportunity in these markets has been in, commodities, currencies, some of the better charts and patterns. I see you got the dollar CAD pair up. We're going to be talking currencies a little bit later. Obviously, opportunity everywhere in this market, but man, these currency markets have been hot, Matt.
The Forex report, like I told Cody earlier in the pre-production show, I said the Forex report's doing the Lord's work this week. It's had a good start to the week, no doubt, with both the yen and the CAD depreciating against the dollar. So, some of the better trends out there in the market, Tim, has been in the currency market. With the New Zealand dollar doing what it's done over the last month, with the dollar holding its trends against the yen and the CAD pair. Outside the craziness of Europe, the currency market's been a pretty fun market the last month.
Yeah, and we'll deep dive into a few of those. Obviously, we also have some bull and bear picks on the option report we're going to talk about. Delta Tuesday is where we identify something that's directional, and then we deep dive on how to play that. And we picked one bullish, one bearish. We're going to get into that later. Let's start with the S&P 500, though. Obviously, Matt, I'm still bearish. We talk about it every day, but you've got to respect support until it fails, right?
Absolutely.
And so it is holding this support zone. You have a little bit of a very aggressive trend line on those pivot mats. If you drew that on an intraday, where it now is coming back down on the intraday here, and it's been going down over the last couple of weeks. What's your read on the S&P?
My read on the S&P hasn't really changed from yesterday, Tim. That's that trend line, that steep trend line you're seeing on the hourly chart that you kind of identified on the weekly chart, on the daily chart. And so it's just kind of coming into that trend line. But my read on it's very similar to it was yesterday. Support so far has been holding at 26.25. And you got to like that. You got to like it as a bull. But the simple reality is you are coming into that trend line. We saw a very similar trend line on oil, Tim. If you'll remember that steep trend line we had on oil, that every time it hit it, it came right back down. And that's kind of what's happening today. You just have a little bit of interday weakness after a little bit of positive overnight action with a report that came out overnight that basically President Xi from China and Trump from the U.S. had agreed on, to work together to come to an agreement. But that was basically a restatement of an old headline from November 1st. So in looking at this, you had a little bit of positive activity coming into the market today, but really no follow through. And I still think today on Tuesday, there's not a whole lot of economic reports that are happening today. And I think most of the market is waiting for Wednesday through Friday this week when Jerome Powell gives a speech tomorrow. You also have the second report on GDP coming out tomorrow as well. And then you have the G20 on Friday. So I think we're in a wait and see today coming into Jerome Powell's speech tomorrow. So, that's kind of just the market does this. Today's kind of going to be one of those days where you're going to have a little bit of action, not a lot of action. But I think it's a day that you can set up the rest of the week.
And when our producer starts correcting how we pronounce names from foreign countries and foreign dignitaries, Cody, tread lightly, young man. We're gonna.
Listen, we talked about this yesterday, Cody. In America, we speak American. Okay.
I don't know what that means. First of all,
everybody in the halftime crew knows what that means, Tim. It's American.
Every time you say, what do you say, Z or whatever, it's just like cringe.
Yeah, President Z.
Well, first of all, I got Prime Minister Abe's name wrong for years. I just called him Abe. And, Prime Minister Abe. And I was corrected many, many, many times. Listen, I'm open to if I make a mistake, Cody, you let me know.
I got no problem people correcting my pronunciation. I also don't care.
So I'll correct it. You may just not change it.
Yeah, we do appreciate you in every capacity, Cody, especially right now.
Cody, you keep us on point, young man. You keep doing the work you're doing. By the way, President Trump did talk about, that deal with China, how they are going to move ahead and raise tariffs on the $200 billion in Chinese imports. I'm looking at the intraday action on the market, Matt. There's not a lot of follow through on this bounce. Market wanted to rally in the morning. It's now kind of just hanging out, settling in really flat for the day, down what, 2 points here, so
Yeah,
far?
it's been up 5, up 6, down 5, down 6. It's just in a fade action, Tim. There's no strong movement one way or the other. Like I said, on a day where you don't have a whole lot of economic activity, on a day where you're kind of approaching that midweek and the market doesn't really know what it wants to do, any buying's met with selling, and we've seen that over and over and over again. I think you're just waiting for more things coming out later on this week. And so on a day where I don't expect to see a lot of movement in the market, it's a good day to be Delta Tuesday, because that allows you to set up some of your trades that you're expecting to trigger coming into tomorrow on the bull side or on the bear side too. I think it's a good day to prep.
Yeah, I agree with that. There's a lot well, first of all, every day in the market, there's something to do. That's why we call it a daily trading routine. You work through it step by step by step by step, apply and identify what the opportunities are. Give me FXI for a minute, if you would. Let's just take a look at the Chinese market. One of my beliefs for all of those, if anybody out there is wanting a bullish run, I think it's got to start internationally, Matt. And FXI, has a little bit of a reversal pattern. If I'm looking at the ES and the US markets and the international markets, including EEM, I would be more interested in getting long on a breakout on some of these than maybe even the US stocks right now. And I know that's blasphemy over the last few years because the US just killed the international market.
Blasphemy in 2018.
Yeah.
Right. It wasn't blasphemy for Bob and a lot of those stocks coming into like the VIPs coming into 2016, 2017. So it's really only been since February of this year where those Chinese stocks have been really kind of rocked. And yesterday I asked Cody in our pre-production show, I said, Cody, is it time for us to buy BABA? Right. And we were both looking at BABA and looking at FXI, and you see that same type of reversal pattern happening here. Look at this trend line, this steep trend line that had developed over months and months and months on BABA. Look at the slowing down here, positive earnings report. And also I want to give you a little bit of stat, Tim. Cyber Monday saw about a 20% increase this year over year. And we were expecting that with the drop in same day brick and mortar stores year over year with Black Friday. Cyber Monday did actually very, very well. It sold, I want to say, somewhere around $7.6 billion worth of Cyber Monday deals. Tim, in one day, BABA last year sold like $30 billion in goods in one day. And Cyber Monday produced $7.6 billion out of the US. So BABA is a massive, massive company that's obviously been driven down a lot because of the international politics and geopolitical environment and trade wars, tariffs, you name it. But doesn't change the fact that this company is a massive company that is a growing company that is still a growth company. So the question I posed yesterday and what you're kind of posing today with China is this a buying opportunity for a bunch of companies that have been very, very depressed from non-fundamental reasons, more just economic and trade tariffs and those types of reasons. So yeah, is China rolling over? Is this a buy for China? I'm not there yet. But when you're looking at the Chinese market, you got this decreasing resistance line that's very, very consistent. I think any trigger on a bullish Chinese position, which would be aggressive. I mean, we are going into the G20 summit meetings, and we are going into an environment where Trump literally this morning threatened to put another 10% tariffs on China on, I believe, January 1st, and another 25% on other types of goods and whatnot. So it is an aggressive situation, no doubt about it. But you can't deny the fact that over the last month, the Chinese market has been turning over, and a trigger above 42 would be a legitimate trigger to trigger into.
Listen, I get it, but there are some reversal signals in there. I agree. And
same thing with BABA.
Yeah, BABA even looks better than FXI. Being bearish on the Chinese market was an easy play over the last 4 months, right?
Absolutely.
Lower low, lower high, lower low, lower high, technical analysis 101. People get way too emotional about trading sometimes. Just trade what you see. Well, crude oil's got to go back up. No, it doesn't. The market's got to go back up. No, it doesn't. When the markets are going down, play them down. When they go back up, play them up. Right now, Matt, and I know this is short term on the daily, but you are seeing behavior in some of these Chinese tech leaders.
Well, the question I got for you then, Tim, is has BABA already confirmed reversal pattern?
You could argue that, yeah.
So because you are now starting to see increases in support here, you have absolutely violated the substantial and very important trend line that had developed from June all the way into October. You got all sorts of head and shoulders formation here. You definitely have broken out of that old resistance neckline right around 153. You're currently breaking out of another high at 157. A trigger above 160.
They always call Alibaba the Chinese Amazon. Give me Amazon real quick. Let's just compare.
Real quick.
Yeah, Go ahead, Cody.
I was going to say, just like yesterday when we were talking, you see that 20 and 50? We're almost about to have that 20-50 cross as well.
Yeah.
Just another signal. We have a couple different signals for reversal here. Yeah,
and you can't deny that, right? Just because you have geopolitical situations happening, and just because we've seen this, these conversations happen for 10 months now, doesn't change the fact that Bob is reversing here. That to me is a potential buying opportunity. On the flip side, Tim, looking at Amazon, I want to touch it.
Exactly. That's what I'm saying. Like when I'm breaking down all of the different markets and I'm looking at the news about the China-US trade stuff going on. By the way, none of the thing that Trump said had any definitive action in it. They don't even have a deadline, or they don't take effect until January 1st. Okay. Yeah. So there's still 5 or 6 weeks until this even plays itself out. But if I'm looking at US tech versus Chinese tech right now, and it's not exactly clear yet, but I am liking the reversal behavior in some of those Chinese tech companies a little bit better than the other ones. Oh, calm down now.
The
VIPs will do you dirty. Be careful.
It will do you dirty. It will do you dirty. Oh. But again, the VIPs has been one of the companies that have been beaten up the absolute most this year, gotten just absolutely crushed. But Tim, look at this.
Yeah, I still like
another inverted head and shoulders. And this is not a bad company. Right?
No, it's a good company.
Fundamentally, this is not a bad company. Mm-hmm. It got absolutely slaughtered this year. But Tim, I'm gonna tell you right now, I'm buying if it breaks 6.
Well, and here's the thing. This is a great example, and we didn't talk about this in pre-production, but even good companies can get swept up in market themes. It doesn't matter. You can't avoid it. When you're a high growth, high PE type of company in a market like the emerging markets in China, when the market was good, the VIPs was just killing it. And they are a very, very good company, well run, good fundamentals, good service, all that kind of stuff. But then the Chinese market takes it on the chin in 2018. And so a high growth company like this takes it on the chin as well. And now we're down at the bottom.
The VIPs was a company I traded quite a bit in 2017. One of the reasons we added it to the Tackle 25 was it had a tremendous amount of momentum going into it. It had a low PE ratio. It had increasing revenues and earnings per shares. And it was a competitor to Amazon. And we already had Baba on the Tackle 25. We pulled Amazon off the Tackle 25 because of the high valuation, the high PE ratio, but we wanted to get a company like that. And, VIPs was paying out 4 to 4.5% on covered calls every single month. But I'll tell you, Tim, trends and patterns are very important. You see the double top, double bottom, you see the kiss of death right here. Once that happens, and then obviously with the negative reaction to the earnings right here, you should have been.
Did we lose audio, or is that me here, Cody?
That's just you. I got an audio
me then.
Still.
Yeah, that's on you. But the point is
and he's frozen.
Yeah, it's on Tim. The point is, Cody and Tim, as VIPs is coming down, it gets caught up in that trade war conversation, that tariff conversation. But then again, you come back to a company that's been absolutely just hammered over the course of the last, 10 months, Tim. It's slowing down. It's showing reversal patterns. This is a technical head and shoulders formation. You have the left shoulder, you have the head, you have the right shoulder. You have a very, very clean line right there at $6, old support, new resistance. You break out at $6 with the moving averages running over, that's an opportunity.
I've been saying this for a long time. If you're out there and you're halftime crew, you need to study the art of the reversal, not just for any market, but particularly this market. Markets as they change, Matt, there are subtle characteristics in those trends and the pivots and the behavior that tell us something. You and I see it in the VIPs instantly. Boom, the pivot is coming back up. Got a little bit of a W inverted head and shoulder type situation here. A break at 6 would be a trigger. I'm interested in Chinese tech. I'm not long. Chinese tech yet. I'm not going to say that because I'm not. But the reality is I'm seeing some behavior that is grabbing my interest.
Like I said, I'm not into BABA yet, but if BABA breaks 160, that's a potential trigger. FXI, if it breaks 42, that's a potential trigger. And VIPS, if it breaks $6, that's a potential trigger. And I'm sure we've seen that across the lines with a lot of those Chinese tech companies, Tim.
So much of it.
Hold on, let's take a look at this real quick, because unlike the U.S. markets, let's look at the Chinese markets over the course of the last little bit, okay? So just give me, 10 years and let me show a couple things. Number one, this is the Chinese market over the course of the last 10 years, right? Not exactly, what we're seeing in the S&P 500 over that exact same time frame. Mm-hmm. But as you can see, there are moments where you have these massive volatility shifts to the downside, massive volatility shifts to the downside, massive volatility shifts to the downside. But eventually it slows down, pops right back up, going back up. So in terms of this, yes, this is what you're seeing this year, just massive depreciation coming in down into the middle of its range. However, you can certainly see it slowing down right here, Tim. If that pops back up, yeah, I think that's an opportunity in Chinese tech companies. You got to confirm, right? You got to confirm, but they're rolling over.
It's not there yet, but we've got some interesting behavior. By the way, I want to do something real quick and fun with my halftime crew. Guys, if you're out there in your halftime crew, put in the chat where you're watching the show from. I always find it interesting to know how big our audience has become and, how global and also just around the country it is. I look at all these names, Matt, and I know we're all over the country here. So whenever I say good morning, I realize it might even be afternoon with everybody. So if you're out there,
most likely it's not morning somewhere.
For a lot of people, for sure. Back to the S&P 500 for a minute, if you would. I'm looking at the advanced decline line on the intraday map. Most companies, there are more companies going down. 300 out of 500 companies are down today. You have more bearishness in general. PCNG is back up. AMD is back up. Vertex is back up. Those are your gainer types. Give me AMD for a minute. I know that's one of the more popular companies that people trade, always on the more active list. You even have some reversal behavior in here. It's held that 200 moving average a couple of times, and now you're pressing resistance, Matt.
I think a break of 22. That's a good trigger on AMD, a break of 22. And AMD is one of those companies, Tim, I enjoy trading because you can do so much with it, right? You can protect it easily. You can do covered calls where you're getting 3 to 4% ROI. You can trade it directionally. Obviously you got to have the skill set of a trader to make those decisions, but a trigger above 22 is a clear entry.
Yeah, I like AMD above 22 as well. It's got breakout potential. PCNG obviously back in the news. They're going to be in the news for a while. Not tradable. Most likely will just come off of all of our lists at some point here. There's no way that we can keep it with the stuff that they've gone through with the fires and whatnot. Companies that are down, Range Resources.
Legislation is coming out on PCNG, and that's what's kind of driving it today. The breakout at 25 is the technical trigger, but this company has so much risk in it right now. Can't touch it.
There's not a single company on the S&P that is down more than 5% today, which is interesting. Usually you're going to get a couple of earnings ones, just a mixed flat day in the market, quite frankly. You got some stocks holding it up, some stocks not. Let's go on to the Dow Jones Industrial, if you would. Move on to the large caps. YM, very similar pattern.
Same.
Yeah, almost identical. Most active companies on the Dow today, out of the 30 companies, you got 15 and 15, Matt. 15. You got a tie ball game. 15 stocks going up, 15 going down.
I'm going to say the Bears win.
Probably
17-13. I'm saying the Bears win. That sounds like a Bears football game, actually.
Here's your list of winners right now: Verizon, United Health, Walgreens, Cisco, and Intel.
Look at them; they're all safety.
About a percent up. Verizon's up 2% actually, which is a nice move. UTX, Nike.
We've talked about Verizon before, and Verizon came off a very, very good trigger here, triggered again today. That was a very good.
It was on the report.
Yeah, it was on the report.
Beautiful pivot trigger run right there. I like that candidate. Definitely Verizon was a good play. United Health is also another consumer type company that is in a defensive area, Matt. We've talked about that. If you're going to go long, in fact, in the option report in the past weekend, I spent quite a bit of time talking about if you're going to get long in this market, find some safety, find something like Staples Healthcare, those types of abilities.
You talk about some of the stocks setting up today, Kroger, Coca-Cola, Walgreens, Procter & Gamble, Pepsi, McCormick, all those are safe names.
Yeah. Yeah. Dow's pretty mixed right now. Market's pretty mixed. We got a flat day here today. You know, some of the stuff that they may be waiting on, Matt. We do have Fed testimony later tonight. We'll talk about that when we talk about the dollar, I'm sure. Moving on to the NASDAQ. Let's look at tech real quick.
Real quick, Coach Frank from Tackle said hammer at the 50 on Johnson & Johnson. Good call. I think, Frankie, on that, trigger above 142 at a minimum, I would say on that, Frankie.
Well, and that's also old resistance, new support, 50-day moving average, couple of different catalysts in there. Good find there, Frank. By the way, just a shout out to Coach Frank. Coach Frank is doing an excellent job. He runs our onboarding program, which on Monday nights, if you're a new member of Tackle Trading, we run a webinar for that. And he's also doing a lot of our Twitter stuff over at Tackle Trading on Twitter, Matt. It's a great follow.
He does
and the market recap every day.
And
he does the market recap on YouTube. He does the Tackle Trading Twitter account. He does the onboarding on Monday night for new students. And then he's probably met one-on-one with a lot of these halftime crew because he does our one-on-one onboarding sessions for new clients as well.
Let's make Frank feel pretty good here, guys. If you're halftime crew, just say thank you, Frank, or hi, Frank, or yeah, absolutely. Good job right there. Johnson & Johnson, good play. And also in that conservative type area, defensive type stocks, you name it. Top gainers on NQ, Matt, if we're moving on to some tech stocks, Vertex, Autodesk, Henry Schein, C-Trip. But again, not a single company up over 5%. There's not a lot of news driving markets today on big names. We're not seeing that. Even the biggest loser today is 2.5%, 3% on the NASDAQ. That's not very common.
There's not a lot of movement.
There's not a lot of movement. Yeah.
Well, it's like I said, earlier today in the report, there's not a lot of movement today. This is a day where you're setting up some trades, making a few trades, but I don't expect a lot of movement in the market, even coming into the close today. I think there's too many important economic events coming into the later part of the week.
I like it. I like a nice tame day in the market after the craziness we've had for a couple months. It's not a bad thing to have just like a nice mellow doji. I don't know if we're going to settle there. We'll see if the close does do what we just talked about. And that's, always more important. NASDAQ here, Matt, it's been more important for me, the way I trade watching this one, but not necessarily, it's not going to stay that way. It's more bearish than the other two. It's not that hard to call. You've got a lower pivot low. You're developing a bearish retracement.
It's not a difficult call. The NASDAQ is the weakest of the bunch.
I agree with that.
Listen, you cannot deny a couple things. Lower low, lower low, lower low. You can't deny that.
Yeah.
That's visually. You can't deny that. That's historical price action. That is a bearish downtrend. Lower high, and most certainly going to form another lower high, Tim. Where that forms, 6,800 would be a perfect bearish retracement, but it could form right now, Tim. You have old support right here at 6,700. That's where you kind of slowed down, but the NASDAQ's bearish. You can't deny that.
One important company to watch that is in tech here today, earnings after the bell, is CRM, Salesforce.com.
Company we really like. We just like this company. We like Benioff. We like the company. We like Salesforce. We like what Benioff represents. We like the person, Mark Benioff, right? Would you agree with that?
100%.
We just like Mark Benioff. And I put him, I think he's one of the top 10 CEOs in the world. Okay. So in terms of this, look at the consistency of this. How many times do we have CRM on a scouting report in 2018 on the bull side?
Oh, at least 6 or 7. More than that, probably.
Here. Even here we had it, right? This was the only one. This was the one time it failed. Haven't had it on a scouting report, not even on a bearish one. Because again, I like CRM, but important earnings announcement for CRM obviously tonight.
If it didn't have earnings, Matt, that's a bear retracement. Almost perfect setup, but you're not going to play that in front of earnings, obviously. I'm going to be watching tonight. I went back and tracked CRM's earnings, and we're not going to do a deep dive on volatility today because we've got some Delta ideas coming up. But I'll tell you, it's a pretty consistent gapper. It does not have some big 30% gap here and there. It's a big company that's growing, and it just kind of gaps the way it does. I believe the MMM move is about 4.5%. If I remember my numbers right, 7.2 on 125 bucks. So
divided by
that's more than 5.5%.
About 5.7%.
Yeah, 5. Yeah. So it's going to have a movement, and it is more volatile than say Apple assumed.
I don't know. I mean, you got a small movement here. You got a fairly small movement here. 127 to the opening price of 132, 5 points on 130. On this one over here, goes from 116 to the opening price right there at 124 points. I mean, I'm not seeing the gapping personality, Tim. I'm seeing a stock that typically gaps in that 3 to 4% range with an expected gap of 5.7%. That screams to me typically in short strangle. I'm not going to play CRM on a short strangle. I'm just saying that does lead to that conclusion.
I'll tell you, that's exactly what I concluded as well. I was doing a mentoring session with Cody this morning. You know Cody really well. And one of the trades that we set up and we talked about was short strangle on CRM for a paper trade. What I told him is the market volatility, the way it is right now, has gotten me off of doing short strangle type trades. I don't want to be naked options into something where
Tim, in the last 2 weeks, especially coming into those last couple weeks on earnings season, all those movements were priced in well above what they actually did.
Yeah, this one's tickling me here today.
That's a lot because of that market volatility, right? Because of the market volatility, the options market has to price in that expected type of price range. I'm going to tell you right now, CRM has not had a 5.7% expected gap range last earnings.
It hasn't.
It didn't have it the earnings before then, and it didn't have it the earnings before then. CRM has not had that gapping personality. So I think the market's pricing in a little bit more aggressively on a gap, just given what's been happening in the market. And that's obviously led us to shy away from short strangles. But the data does suggest short strangle here.
You know, if you're out there, put CRM on a watch list. If you don't trade earnings, you don't know strategies like that, just watch the gap tomorrow. There might be opportunities post gap here as well, Matt. We'll come back to CRM tomorrow, I'm sure.
Just as a reminder, at a bare minimum on short strangles on earnings, you got to sell at least twice the expected market maker move, and that's at a minimum. A lot of times you want to sell, 2 to 3 times what the market maker moves expects. And so if the market maker expects a 7-point range, you need to sell at least a 15-point range at a minimum. And I'll tell you right now, I would not be comfortable with that. If I'm looking at short strangle here, Tim, and you can go out even more time, but you would have to sell at least the 110 by 140 contract, I would say.
Oh, no, I was actually looking at like 100, 150.
Well, no, I'm saying at a minimum, you would have to sell the 110 by 150, 140. But if you can go 100 by 150, that's a trade you might be able to convince me on.
I ran the numbers. I got the prep on my sheet. I haven't pulled the trigger yet because, quite frankly, this market, you don't want to have open-ended risk graphs like that. I don't know. I probably will trade that, by the way.
Yeah, earnings is tonight. You got a few hours for the market closes. You'll be fine getting in that trade. CRM's not going to do anything between now and the close.
Yeah. RTY next. Let's move on to small caps. A lot of those tech names, by the way, I'm sure we'll be setting up over the week. We'll be coming back to them. RTY has been pinned around this 1500 mark. It's in a weird pattern, kind of double bottom like the S&P and the Dow. A little bit of a bear pivot here, Matt. If I was going to look for a short opportunity among the indexes, it might be a break on the small caps because of this pattern.
No, it would be either the small caps or it would be the NASDAQ.
Yeah.
Either one of those have good shorting opportunities in them.
Yeah, and I'll tell you, I had bull puts on like the 1300 strike, and I put those on probably 2 or 3 weeks ago, and I'm thinking about hedging them. I definitely am ready to hedge them. I'm not going to hedge them today. The market's not showing me that, but you got to be ready to pull the trigger on that kind of thing.
Hedge anything under 1460, I would say.
That's where I'm at. That's where I'm at on that one as well.
I would not hedge until it breaks 1460. And you're specifically talking about cash flow condors, correct?
Correct. Yep.
Okay. So for those of you who are not members of Tackle Train Pro, cash flow condors is a premium system that we, basically trade over there. And it's a deep out of the money, iron condor on the Russell 2000, where you usually have at least 10% range to the downside, Tim, and typically 6, 7, 8% range to the upside. So, if it breaks 30 points down, Tim, you still got 8% range to the downside. You got plenty of range. So I don't think you need to hedge just because the market's starting to show a little weakness intraday today.
Yeah, I'm just a hedger. It is what it is. I'm a little bit more quick on the trigger with that because I like fiddling with risk graphs. And by the way,
you do, but I also want to say that most of the time people hedge, it's a mistake.
People overhedge. In fact, I was talking to a student this morning, and he had asked me a question about, well, how many times should I be hedging out of, all of these trades? I said, if you're hedging half of your trades, you're way overdoing it. Hedging should be reserved for those rare circumstances when you need to protect, but you don't want to take off the trade, right? Or you want to adjust it, or there's a unique opportunity. We can.
I'm not saying that trade management techniques aren't important, Tim. I'm just saying most of the time traders applying trade management techniques are trying to repair. Typically, they're trying to repair a broken trade that's already broken. Right.
Correct. Yeah. Correct. Yeah. So there's a catch-22 there for sure. Move on to the dollar, if you would. A lot of the action here today is going to be in currency and commodities. Let's start here with the dollar. Matt, just a beautiful pivot run. Forex report was wonderful this week. If you're out there and you don't trade a lot of Forex, start trading some Forex. It fits a role in speculation in any trader's account, whether that's in a Forex specific account like FXCM, Awanda. There's a lot of different debate about who to use and whatnot. I don't really care. I also like the opportunity to trade in a multi-product broker account. TD Ameritrade, a lot of the Tastyworks, a lot of these guys, they also allow you to trade Forex while you're trading your option stock and futures. This was a beautiful run here, Matt, and you did a great job calling that.
Yeah, I don't want to say it was an easy call because it wasn't. You have some mixed signals happening right here, but it closed, back up above 97 was easy for a trigger. Also, in my video, I did a deep dive on the US dollar versus the Canadian dollar. And I basically said, guys, it's a repeat from last week. It's all we're doing. We're repeating last week, and it did it again in one day. The question is the dollar gonna run even more aggressively against the CAD? That's an open question that Cody and I were talking about earlier. The U.S. dollar versus the Japanese yen pair, JPY. Looking at this one, had a trigger right above that, right above the pivot high at 113. I want to say, I can't remember exactly what I put it in, but it was somewhere around 113.15 to 113.30, and it triggered above there, and now it's approaching its first target at 114. So, the Forex report had a good start to the week. We'll see how it ends.
I mean, here's the thing. There's opportunity, even those small pip movements, Matt. I mean, those are good percentage ROIs. There's leverage in the Forex market.
Listen, if somebody wants to say 100 pip gain is not good enough, get out of here.
Yeah, I'll tell you, 100 pips on a mini lot's $100. On a standard lot is $1,000. So
it's a 50% ROI in a day.
Yeah.
What are we talking about?
What are we doing here?
Literally, Cody made 50% ROI on a trade I put in the Forex report.
Cody, what do you love about Forex? Because I know that because Matt mentored you about, what was it, a year and a half ago?
Oh, no, that was almost 2.5 years ago.
2.5 years ago. Yeah. Oh, time flies, Matty.
Yeah, it does.
C'est la vie.
So I have to say what I love about Forex is where I typically do my straight delta. Just the speed behind it is what I love. My options account are typically theta based, slow, steady. But yeah, Forex I just love because of the speed, the way that I can. Because when I try to delta trade the market, I get antsy. So Forex kind of helps me not get antsy too quickly.
Yeah.
Oh, if you struggle with attention problems, Forex will be there for you because it's quick. There's no doubt about that. I mean, 2 of the last 3 currency trades I put in the Forex report, Tim, were one day and they were out.
And day trading is kind of what I think about when I think of Forex, but it's also a good swing trading instrument.
Yeah,
as well.
But that Forex report is a swing trading report. It's not a day trading report.
Yeah.
I'm just saying from the entry to the target, it only took one day. And even though it was set up as a swing trade, if it hit your target in a day, like I told Cody, take the gift from the trading gods.
What do you expect out of Powell tonight? And or is it tonight or tomorrow morning? Is it tomorrow
morning?
Yeah. What do you expect out of him?
New York, nothing.
Yeah, me neither.
I expect him to say recent market volatility isn't going to stop us from doing what we're going to need to do and that our job is to control inflation.
Yeah, hold the steady course. That's what I'm expecting to hear.
Yeah.
I don't know where the Economic Club of New York is, what part of the city that's in. Would you attend that event, Matt? If you had an invitation, they called you up, say, "Hey, Matt, come to the Economic Club of New York and listen to Fed Chair Powell testify." You showing up?
In how quickly could I get to the airport?
I would be there in a heartbeat.
Like in a heartbeat. Are you kidding me?
That'd be one of the coolest things.
Yeah. But no, I'm not expecting Powell to say anything he hasn't said recently. I mean, I can't remember who the Fed member was today. Maybe it was Bostic today, but gave a speech and he said basically that we're closer to neutrality today versus where we were in 2015, which is obvious. They've had 7 interest rate increases since that time, but we're closer to neutrality, but we're not there yet. And that's exactly what Chairman Powell has been saying. So I expect him to stay the course. I expect him to raise in December, and I expect him to normalize interest rates by the end of next year. And I don't think a market crash is going to stop him from doing what he thinks is the right thing.
I think you had Clarita and Bostic both testify here today, and Chair Powell tomorrow. They got the FOMC minutes coming out later in the week. And really, for me, though, because you got all this testimony, there's no doubt about it. Powell's the headline. But the G20 meetings starting this weekend are something we're going to have to dig into and talk about next week, I'm sure. Not a lot on the economic calendar in that regard, though.
No, in the G20 summit meetings, you're going to have conversations over trade, but the impact is going to be in the currency market. For the most part.
Yeah. Let's move on to commodities. Start with crude oil. Always got to start with crude oil and talk about what's going on in that market. Obviously, still volatile, still aggressively bearish. Basically it hasn't had any kind of bull run at all for any elongated period of time. Matt, if it breaks 50, where's our bottom here? Do we even know?
0.
Yeah, probably not 0.
I'm kidding. I was kidding on the 0 comment.
Yeah.
If you break 50, let's go find us some support levels. If you break 50, next stop down is right around 43. And Tim, if you'll remember 43 back in the day, 2016, 2017, Coach Gino, every time Coach Gino would come on to one of our podcasts or shows, he'd be like, yeah, my oil insiders say when it's at 43, we're going to buy. Right? We're going to buy. So I'd say 43, next step under that 40, next step under that 35, next step under that 26.
Crude oil
Write them
bearish.
down, boys. Write them down.
Yeah.
43, 40, 35, 26. Those are your support levels.
There's not a lot of hope for that on the bull side here, Matt. There's nothing in this chart that screams buy. We've talked about that day over day over day over day. We know that it's bearish. The reasons why it's bearish, I guess we could debate about, but really supply has gone up for a long time. We've got another EIA number coming out tomorrow. I'm sure we'll be deep diving into that. You know what's amazing is, Matt, a 1.2% move is pretty light day here for crude oil when it was down 7-8% day over day on Friday, and a couple of different, Tuesday last week when it just got crushed as well.
Friday and Wednesday last week were nasty for crude.
I actually would have expected a bigger sell-off on the dollar strength, by the way, so if you are looking for anything to hang your hat on, maybe that the fact that it hasn't sold more aggressively here today. If that's the best we can paint for crude oil,
that is the best you can paint. If you're still holding crude, say la vie.
Yeah, Brent down as well.
A trigger under $50 is a short trigger.
Yeah, absolutely. There's no doubt. You can trade that below 50.
That's the only trade anybody should be looking at in crude oil.
Yeah.
They should not be looking at, well, should I buy at 50 because, it got cheap risk? No, you don't. You don't have cheap risk here. Cheap risk is when you're buying at support in an uptrend, or when you're selling or when you're shorting a stock at resistance in a downtrend. That's cheap risk. Cheap risk of picking up oil after it's got crushed 25% just because it slowed down at $50 for 3 days isn't cheap risk. It's just plain lunacy. It's asking to be punched in the face is what you're asking to do. A short trigger under $50 is the only trade I'm looking at on crude.
I'm looking at all the different energy prices here today. Everything's pretty much down. Gasoline down, London gas down, crude oil down, Brent, heating oil, natural gas even down 0.28%. UNG has been really volatile, which I actually want to take a look.
Can I just say something really quickly?
Mm-hmm.
When commodity prices go down, when energy prices go down in the futures market, that does not mean you're going to pay less at the grocery store. That does not mean you're going to pay less at the gas station. And if you listen to anybody who says stuff like that, they don't understand economics 101.
Mm-hmm. Yeah.
They are not correlated.
Yeah, I agree. But that's not what the headlines are going to be. People are going to be like, well, gas is cheaper, all that kind of stuff. We talked about even Trump taking some credit for gas.
I'm not even saying gas and oil, Tim. It's food prices as well. We saw food prices go down in the futures market for year after year after year after year from 2010 through 2017. Okay. Well, did people pay less at the grocery store for a gallon of milk or a gallon of orange juice or a loaf of bread or a carton of eggs? No.
You just
Paid
made me
more.
think of a moment from politics. You remember when President Bush, the first Bush Senior,
Yeah.
in a
HW.
debate, they asked him how much is a gallon of milk, and he didn't
And he
know.
didn't know. Yeah,
Yeah,
that was a bad sign
I'll
for
never forget that.
old President Bush. I really enjoyed President Bush Senior, though. I thought he should have got a second term.
Well, it's the economy. I mean, you look at what Bush Senior did. I mean, he was a great president. He came in.
I
He's a
thought he
great
was.
leader. I've always liked the man. There's no doubt about
President
it.
Bush Senior is a great American. Period.
100%. And he jumps out of planes at like 90 years old. So not a great coin flipper if you saw the Super Bowl.
Yeah, I did. He college effort, though. College effort. He gave good college effort.
I agree. Obviously, energy is down. Give me XLE though, Matt. We had a request here from one of our best, halftime crew members here. Abel asked, "What about XLE? We're talking energy prices. Crude oil's going down, but yet XLE is not really seeing the same kind of weakness that we saw in crude." I'm bearish on XLE. Where do we have this one on the scoreboard this weekend? I know
I think negative 30, negative 35, something like that.
Yeah. We've got a bearish call on it in general. Where's our triggers here, Matt? If you're looking to play XLE?
64. Trigger at 64. Anything under 64 is another bear setup.
Yeah, I agree. Stay with commodities here for a minute. Let's go through the metals. Give me gold, silver, GC. Down, dollar up, gold down. We've been neutral on this. Yep. I want to get bullish on gold, and I will buy dips on gold. If it finds support, I'll probably buy it again. I like gold. I'm interested in gold. The reality is, though, Matt, the dollar is really, really strong. I remember in our meeting last Friday, that was basically the consensus from the coaches during our discussion is how can you get aggressive on the gold markets or the metals market when literally the dollar's just going up. So
it's hard. There's no doubt about that. And I mean, the dollar to me is the second strongest currency other than the New Zealand dollar right now. And I still like the New Zealand dollar. I think the New Zealand dollar is setting up for potential trades against the CAD pair, against the Japanese yen pair, and potentially against the US dollar. So, but I just don't like shorting. I don't like shorting a currency and buying another currency that I both think is strong, like the New Zealand dollar and the US dollar. So if you're pro New Zealand dollar, you probably want to look at something against the yen or the CAD or the euro or the pound or something along those lines, not the dollar, which is also very strong. I don't anticipate, especially with what's happening right now, Tim. If we break out on the dollar, gold's coming back down to 1180.
Mm-hmm.
I mean, that's going to happen. So the key on gold is not really looking at the support resistance channels. We got a neutral rating on gold because of the trend. The key is now as the dollar once again approaches that 97.70 level, does it have the gumption and does it have the momentum to get above that level? If you get above 97.70 on the dollar, Tim, you can easily expect gold to come down to a minimum of 1,200 and potentially run all the way back down to around 1180. Now, even in every single one of those capacities, I would still be neutral. I'm neutral anywhere between 1180 and 1240 on gold. There's no trade for me until it breaks out of those levels. So it's just a matter of being patient. But if you're waiting on gold as a gold bug, you're going to be waiting a little bit longer. The dollar's really strong right now.
Take a look at silver. Actually, I'm more neutral on gold, but we've been actually calling silver a little bit bearish here, Matt. And we even had a bearish silver stock on the commodity report, a stock report. I can't remember which one it hit. Pan American Silver, PAAS.
I think it was stock report.
Mm-hmm. Yes, poor silver. I do like buying physical down here on a low, and I have said it before in the halftime report. I'll reiterate it. Not a bad Christmas gift to get a silver coin, give it to somebody if you want to teach them about metals.
We started doing that years and years ago, Tim.
Yeah.
Giving silver eagles to people we care about, their kids, our nephews, our nieces, and whatnot. And we started doing it just to spark conversation with our brothers, right? To talk about why we invest in precious metals. And so, yeah, it's a great gift to spark conversation if you care about people.
If you've never owned any real precious metals, it's a really cool moment to actually feel them in your hand and, get an ounce. The weight of it is substantial. You can get those 5-ounce coins as well. I got to take another trip down to the coin shop.
It's like stacking.
I know you love it.
Stacking. Here, I'll just let you listen to it for a second. Yeah. Just stacking chips over here.
Hey, man, that's cool.
Staring at tubes of silver over here.
Yeah. Coach Greg, you're going to have to ask Coach Greg one time. Maybe we'll have to have him as a guest on the halftime report here.
Coach Greg just wants me to buy Canadian mint, and I want him to buy U.S. mint. We'll see how it works.
We should set up a tackle poker game with silver chips.
Dude, that'd be pretty cool.
Fortino, I buy my silver, and we have an agreement with Zahner's Precious Metals out of Chicago. And we have a link that you can go click on that link and buy silver from an amazing broker there in Chicago. And Fortino, we've also had Pete Thomas, a commodity expert, on our podcast. And I'm sure Pete's going to be coming on one of our shows here as well.
Yeah. And we can probably find that link.
If you love tackle, support all things tackle, use our vendors, no doubt.
Yeah. Zahner's great. Pete's great. We love having Pete on the podcast. He just tells old stories.
I love Pete.
One of our favorite personalities for sure. The thing about this metal market, Matt, it is significantly down compared to some of the other markets, but nothing really violating support, nothing that's going to scream bearish or give you a new trigger or anything like that.
Not until it triggers underneath 1385.
I agree with that. And last but not least, give me Bitcoin. And I do want to talk
I thought maybe you would say the VIX. I thought for 1 second, last but certainly not least. And I was going to say, but definitely least.
Well, this one's definitely least as well.
I had the joke.
Bitcoin, poor cryptos, they've just taken it on the chin here. 6,000 down to 3,600 in about 10 candlesticks, Matt. That's almost a 40% drop since the beginning of November. Just aggressively bearish.
Keep holding, holders. See what happens.
Hodl. Many of them may be holding forever.
Where's the floor?
The floor could be zero.
The floor is zero.
Yeah.
The floor is zero. Guys, you're seeing a guy I follow on Twitter, and you guys probably know him, Peter Schiff. I have some commonality with Peter, I'd say. I obviously disagree with him on certain things as well, but he's been a gold bug for a very, very long time. And Peter said something about on Twitter, and I'm paraphrasing here, but he was talking about the crash in Bitcoin, and he was saying this is indicative of something a larger problem happening, right? That you're seeing money flow out of Bitcoin in the crypto market in general, but it's money coming out of speculative assets. And this is going to have a bigger impact on the market down the road as other money starts coming out of more speculative assets like stocks. So it's something to keep in mind on that, and it could be concerning for the market to a certain degree that so much money is coming out of speculative assets. Tim, we're talking $150 billion lost money this year in Bitcoin.
Yeah.
It's just been crazy.
What was that site we used to love? Oh, it would track the Bitcoin market cap. What is the total market cap of Bitcoin right now?
Is it CoinMarketCap?
CoinMarketCap.com, I believe.
CoinMarketCap.com.
Yeah. Total market cap for all the cryptos at this point. And by the way, it was close to $1 trillion at one point.
Yeah.
Which is crazy if you think about it.
Now?
God, if I'm reading it right.
150, 200 billion?
120 billion.
Yeah, 120 billion.
120
so
billion.
$1 trillion. Think about that, guys. That's like Apple Computer going from $1 trillion company earlier this year to by the end of the year being at $40 a share.
Mm-hmm.
Right?
Well, not even 40, Matt. It would have lost 90% of value. So $20 a share, from 220 to 20. Just crazy. Crypto markets are obviously under pressure. Is there anything that would get you back interested? I know you're a contrarian. You're out until
I'm out until the public capitulates completely, and then I'll get back in.
Is this not capitulation? I might not completely yet.
Not yet. No, it's not. It's not yet. No, you still have the lovers of all things Bitcoin, and eventually they're going to lose all their money. And at that point, then I'll step in and buy.
C'est la vie.
Listen, I do that on everything. Once the public comes in, I'm out. Let the public do whatever the public wants to do. They're always wrong.
Yeah, there's a lot of logic.
I'm a contrarian for a reason.
Yeah, there's a lot of logic.
The public is always wrong on everything. Everything.
So you just got to Costanza this thing. Do the opposite. Maybe one thing the public's right on.
Name me one thing. Just give me one thing the public is right on.
A lot of new Bears fans out there. A lot of new Bears fans out there. I think they're right on that one.
No, listen. Okay, Vegas taught me something very, very simple when I was handicapping football games back when I was in law school, Tim. Okay? You always bet against the public. If the public loves a team, you bet against them.
Yeah.
If the public starts loving a cryptocurrency because they think it's the next greatest fad to ever hit mankind, and it's going to change and it's going to evolve and allow the consumers to fight against the proletariat and all this, yeah, I'm out. You're not winning.
Vegas taught me that it's always better to be the house. The
house is Wall Street.
That's right.
We knew what Wall Street was going to do to Bitcoin. This was not a hard call, Tim.
Yeah, I agree.
No, so to answer your question, no, I'm not buying at 36.65.
No, there's nothing here. It's going to be interesting watching this thing free fall. Obviously, it's completely in that mode right now. Ethereum down at $100, Matt. I mean, I remember. Well, I'm just saying these numbers are very interesting. Obviously, if you track these markets for as long as we have.
What was the top of Ethereum? Was it like
1,300 or something like that?
Yeah. I mean, we're guys. I said it last year in 2017. Tulips. That's all you got to say. Tulips.
This makes you so happy.
It
makes you so damn happy.
It does not make me happy.
It does make you happy.
It does not. It does not make me happy. It drives me crazy when these fads happen, and I see in the public atmosphere all these ridiculous that I know are not traders, are not investors, don't understand economics, and they come in there and they just start pumping and pumping and pumping and pumping and pumping, and I just see these get rich quick type eyes get really big, and it just goes against every philosophical belief system I have. That's all it does. So yeah, I get a little passionate around when I see idiots on Facebook going out there and promoting stuff that they should never promote. I got furious last year in the summer of 2017 when I saw a real estate individual start a new business trying to get people to borrow hundreds of thousands of dollars to buy and speculate in Bitcoin. And I called them out on Facebook, and I called them out publicly, and I'll call them out again, because that is criminal behavior. That is absolutely completely wrong. But I saw over and over and over again. And I feel bad for the people that believed in something that they did not know but got sold a bill of goods, and that's all that was happening here.
I agree. All right. Listen, that was crazy. And those people are crazy. The way that and these fads, I mean, it is the behavior that is quite frankly abhorrent. The abhorrent part is not that if somebody wanted to invest in a cryptocurrency and believed in the blockchain, all that kind of stuff. I find those people interesting. It's just clear. You just don't know technical analysis. You're not reading the market correctly.
You don't understand economics 101. You don't understand capitalism. You don't understand supply and demand. You don't understand Wall Street. You don't understand valuations. What you understand is you felt like you bought a lotto ticket and you're going to win the mega big deal and become a billionaire. Good luck buying your penny dollar shoes now. This is ridiculous. What are we talking about?
All right. A couple of Delta plays I did want to get to.
With that said, I will buy Bitcoin eventually.
At some point you will, and it's just when. It's when it bottoms. By the way,
I will tell you, Tim, I do believe in the technology behind it. I do believe in the technology, the technology behind the crypto market. I just don't believe in any of the coins. Not right now.
It's hard to know which one to believe in, even fundamentally. Even the smartest people in the room can't figure this one out this year, I got to tell you. And obviously the markets are continuing to drop.
Blockchain, listen, I've said it more than I can count, Tim. Blockchain can be the future of technology, the future of how we process payments and handle certain different things from a technological perspective. That doesn't mean the coins have to be part of that.
Mm-hmm. Yeah, it's true. It's true. I mean, there's no reason why you can't also come up with new coins or new tech to replace these current coins and whatnot. There's complexity in the market, even fundamentally, but that's where the chart does tell you something. Yeah.
Does it. So you're saying we should sell. You could short under 3,500, I'll tell you that.
Yeah, it's still bearish.
Yeah. Sure. And again, The same thing we're seeing, Tim. The same thing we're seeing the rollover in the Chinese markets. The same way we're seeing the VIPs and BABA and some of those reversal patterns. Bitcoin will reverse at some point. It will give us a tradable signal at some point. And I promise you, when I see that tradable signal, I will say we're buying. But that's not today.
Are you done?
No. I'm not. You got me fired up. You did on purpose too.
Guys, you gotta
rant creation at its finest
right now.
Oh, I gotta tell you, if
I
you
go
want
buy call options and Procter and Gamble?
Let's break down some delta plays. Obviously, the Bitcoin, the crypto markets, they've become very, very difficult, not very tradable right now. We will be visiting them though, Matt. Volatility is going to get your eyes on it. There's no doubt about it. When the market drops 40% in 2 weeks, my eyes are going to start paying more attention. You know, Bitcoin was pretty boring there for a few months. We'll come back to that. Quite a few different delta plays I want to look at here today, Matt. But with the time, I want to get right down to Procter and Gamble. You know, we were debating probably 10 or 12 of them. On the option report, there's like 25 picks. I like this one here today, Matt.
Pure top-down approach to the market, right? Market sitting at support. XLP, we looked at the sectors yesterday. Just take a look. The one sector we started really kind of liking was XLP. We were talking about how it had to confirm. It's trying to confirm right now. A close above 55 is confirmation for me on XLP. So we have the market is sitting at support, showing a little bit of price appreciation. We have a sector sitting at support, showing a little bit of confirmation. And so what I did earlier today is I said, okay, I like this sector. So let me go and look at each stock in this sector. And we had a few of these stocks on the in the stock report, options report over the weekend. So I just wanted to quickly look at it and I said, okay, ADM bearish downtrend, and I was looking for a bullish play here. CL not setting up. Church and Dwight got me interested a little bit here. You're still looking at a close above those levels. I can't remember what we put the trigger on in the stock or options report on Church and Dwight, but it had to clear these bases here. So that piqued my interest. And then I got down and I said, okay, I looked at a couple others and said, okay, here's Coca-Cola. Really like this trade setup on Coca-Cola. Easy trigger above 49. We'll just say the high of today. You can kind of see that high of the day. If you drop it down to a 30-minute chart, Tim, look at that. Easy high of the day, right? Look at that. Once it breaks out there, that's a trigger on a buy side on Coca-Cola. Also looked at Walgreens, another consumer staple company, WBA. That's, not only setting up as a retracement, it's trying to break out and start running. And that's a potential trade setting up today as well. You got Pepsi, very similar to Coca-Cola, setting up as a bullish retracement. And then you have your Mercs and you had your another one that piqued my interest was this one right here, Tim. MKC, but it had a trigger above the 20-day moving average. So, this sector, not every stock was looking great in this sector, no doubt about it, but there were 6 or 7 different stocks from Kroger, Coca-Cola, Church and Dwight, Walgreens, Procter and Gamble, McCormick, as well as Pepsi that were all setting up from a technical perspective. I do think the best of the bunch, though, is Procter and Gamble. You got a very clear technical retracement coming back down into a rising 20-day moving average. You have increasing momentum on the trend. You had slowing momentum with the narrow body candles at your 20-day moving average, and you've had multiple confirmations over the last couple of days. And so out of all of those, and again, I liked them all, Tim, but you're not going to put 7 different trades on in the consumer staple sector, correct? Mm-hmm. You're not going to do that. You might pick 1, 2, maybe 3, but there are some correlation stats.
Well, just very simply in a teaching moment here, if you were going to do that, might as well just buy XLP.
I was literally about to chime in and say that.
Well, I don't know. I think you're right, but I will tell you, I like the profit potential more if you bought these 7 stocks versus the sector itself.
Well, I get it, but then you're adding complexity and commissions and more work.
Agreed. But if you're looking at this, I could see somebody taking 1 to 2 or 3 of these trades, right?
Well, yeah, no, that's fine. But
you're just not doing 7
or 8. No.
And you're probably not doing Pepsi and Coke the same way you wouldn't do the New Zealand dollar and the Australian dollar because of correlation, right? Yeah. So in terms of this, I did like Procter and Gamble the best. If you want to look at Merck, very similar, but you're looking at a different technical pattern. Both companies are really, really strong right now, though. So here's Procter & Gamble. Now, Tim, market, sector, industry, stock, all looks good for Procter & Gamble here. Multiple confirmations. So the only question you have on a Delta Tuesday is how do you take advantage of that movement, right? We expect price to appreciate. We expect it to, at a minimum, go back into the highs of 94.80, but more than likely it's going to actually break out of 94.80 and run. So in the options report, I can't remember exactly what we put our trigger. Above 92.5, which you're triggering right now. In the option report, the first target was 120. Oh, I'm looking at the wrong one. 94.5 by 98. So yeah, 94.5 is right there in the kind of towards the upper end of the range. And then our secondary target was up here around 98. We were just using, Fibonacci extensions, potential average yield, figuring out that second target. Stop loss would have been placed underneath this level. Let me get you the exact one. I believe stop was placed underneath 90.50, which is right here at the very low of this candle. So it's basically a textbook set method trade, right? Where your entry above 92.5, stop underneath 90.50, first target 94.50 by 98, right? Now the only thing is, what are you going to trade? Because it's triggering right now. So the question is for Delta Tuesday, right? Is do you buy a simple call option or do you do something more advanced is the question, right?
Yeah.
For new traders, obviously the recommendation is go out there and practice trades, buy some call options, practice it. For veteran traders, they're going to make that determination for themselves, right? It's like Cody comes into that scouting report meeting and Cody plays a little contrarian with me, right? And kind of challenging me on my stops and my targets. And, Cody really enjoys challenging me on things. But in terms of that, Cody brings a really fresh voice to that scouting report meeting where, he does play that role of saying, well, what about this and what about that? But Cody, nobody said anything negative about this trade. This was a pure
didn't even
setup.
stop. Yep, didn't even pause you at all.
No, it was a good one. So in terms of that, again, the question goes, how do you play this? Do you buy call options? Do you do a bull call spread? Or do some traders do a bull put spread, right?
I was just thinking about that, Matt, real quick. I want to interject because I was going to I've got a book on my bookshelf that we interviewed Guy Cohen on a podcast. In that book, even Options Made Easy for Beginners, right? There's probably 15 strategies you could play, right?
Well,
it's not necessary to have 15 different techniques.
Well, and in that scouting report meeting, one of the things Cody said was, Matt, well, why don't you just say put the stop loss at 90.25? Why do you say underneath that? And the reality is this: everybody trades different systems. Everybody has different rules. The stop loss at a minimum has to be under 90.50. If somebody said, I wanted to give it more room and go down to 88, I got no problem with that as long as it fits within their trade parameters. It's not my job to tell people exactly what to do. It's my job to analyze where things should happen at, right? And you have a support level here at 90.50. So anywhere under 90.50. Now, my rule is 50% of the ATR under 90.50, right? So if I take the ATR, and the ATR right now, I got to move my video here. The ATR on Procter & Gamble is, we'll just round it to $1.30. So I put my stop loss 50% of that underneath 90.50, which would be 65 cents, 89.85. So my stop loss 88. I say 88, 85. Yeah, 88, 85. Okay, target's already done, entry's done. Now, Tim, you as a option expert, you might say, well, you know what? I'm going to buy a call option right now. And we've talked about this technique in the past. As it approaches that first target, then I'm going to roll it into a bull call spread by selling that call option, right? That to me is the best way to play this, is to buy a call option off the retracement, to then wait for it to get into the first target, and then sell a deep out of the money call option with a 0.25 delta. Okay, that's the best way for me to play this. But for somebody that's a little bit newer to the market, buying a call option here is a simple trade. How would you approach it?
call into a bull call.
It's the best way to play,
exactly
right?
what I would do.
Yeah.
That's what I'm doing. So,
Yeah, that's what I'm doing too. So,
call into a bull call. Now, where you end up hedging that bull call, it may be at the end of the day today, Matt. I was in it yesterday, so I've been in this now. I triggered in yesterday.
I'm not in it yet. I'm getting in today.
Yeah.
So you triggered in yesterday. I should have. Yesterday was a really good trigger, but the trigger above 92.50 is the best trigger. So I'm getting into it today. But I mean, if you start to show some weakness the intraday today, I could see somebody saying, well, let me just write that call option today.
It wouldn't be on PG for me. It would be market weakness. If I see market weakness, I'd probably hedge some of these conservative plays, but I may not. I don't know. I'm still on defense on this.
Hold on. Market weakness has not needed a hedge against these conservative plays.
I get it. I'm talking about a complete sell-off, but
yeah. So, but for me, keep it simple. I think entering into a call option, rolling it into a bull call spread as it hits that first target is the best approach here.
And the actual mechanics of how you execute your option play, that's something that you've got to work on through coaching, in the traders lounges, in the coaches show, the cash flow clubs, through education, all that kind of stuff. There's a reason why, because there's just too many different approaches, Matt. But starting with a straight call option into a bull call is a technique that I would recommend everybody learn how to use. Now, by the way, Coach Noah he had given me a guideline years ago that I think is still a great one. If you buy the call, maybe you turn it into a bull call after it's moved one ATR, something like that. Having some mathematical.
That's fine. There's a lot of different techniques. Here's, for me, off a retracement, which PG has done, the easiest trade is to buy a call. And as PG hits its first target, somewhere around 94, you write the call. That's a simple trade to execute.
I love it. Lunch hour's over. We got stuff we got to get going for. You and I got a meeting here in a little bit.
Yeah.
Guys, if you're Halftime Crew and you're still watching this, give us a like, a share, get the word out there. But most importantly, thanks for being here. I had a lot of fun here today. I got to wind Matt up on Bitcoin.
I just don't like scams.
Well, nobody likes a scam.
Listen, I'll tell you something. Okay. So we're launching personal gold at some point soon. And I say that because I have to work out some details. And I know people have been waiting for personal gold, but I have details to work out and different things take some time. But I was looking at one of the marketing messages we had for personal gold. And in the marketing message, there was the word free. Okay. And my son, who's 16 years old, he says he doesn't know anything about anything personal gold. But my son, who's 16 years old, I was showing the video because the video was actually really good. It's a 30-second ad on personal gold. And maybe I'll play it for the Halftime Crew tomorrow because it's a real good video. And if you guys want me to play that for you, let me know. But my son's, and there's the word free, buy gold for free, right? And what I mean by that is we use cash flow to buy the gold, right? That's what I mean from that. And my son, Tanyan, he says, Dad, that sounds like a Ponzi scheme. And I said, oh, okay. And then he says, Dad, I don't really know what a Ponzi scheme is, but it does sound like a Ponzi scheme. And I'm like, I called up Jess, our marketer, and it's like, you gotta remove the word free, right? Nothing in the world is for free. There's always some cost out there. So, I don't like get rich quick schemes. They drive me nuts.
Well, it's, first of all, it's an indicator of the current world we live in. I mean, every one of us, and for good reason, we have our guard up, Matt. We get constant spam phone calls from people we don't know. The marketing world we live in lacks rapport and trust. So anything that would put that guard down, you probably want to avoid for sure. I'm with Tanyan. And by the way, you should make him go study the guy Ponzi. Very fascinating historical character.
I just loved how he said, Dad, I don't even know what Ponzi means, but it just sounds that way.
I'm sending him the Wikipedia page right now. Tell him I'm going to quiz him after the market bell.
Okay.
All right.
I like
Great
it.
job, Matt. Great job, producer Cody. Good job popping in there. Guys, if you're out there, love you guys. We'll see you guys tomorrow.
Halftime Crew.
We're out.